Everyone has an opinion on this. Your parents say buy. Your friends who just bought say buy. Random people on the internet say renting is throwing money away. But here's what none of them are telling you. Right now in 2026, buying costs 55% more per month than renting in the average American market. And if you make the wrong call on this decision, you could be setting yourself back by 6 figures. Today, we are running the actual math. No opinions, just numbers. Let's set the scene with where things actually stand right now. The median home price in the US sits at approximately $400,000. The average 30-year fixed mortgage rate is hovering around 6.5%. National average rent for a comparable home is right around $2,000 a month. Here's where it gets uncomfortable. If you buy that $400,000 home with a 20% down payment, that's $80,000 cash up front. Your monthly mortgage payment comes in around $2,100 in principal and interest alone. Add property taxes, homeowners insurance and maintenance, and your real monthly cost lands closer to $2,800 to $3,000 per month. So you're paying $2,000 to rent or $2,800 to own. That's an $800 a month gap. Almost $10,000 extra per year just to own the same house, and you had to hand over $80,000 just to get started. Let me make the renting case first, because it is stronger in 2026 than it has been in decades. That $800 monthly difference between renting and owning, if you invest it consistently at 8% average annual returns, over 10 years, that becomes roughly $139,000. That is real wealth you built while living in the same house, just without owning it. And that $80,000 down payment you didn't have to lock up in a house, invested at 8% over 10 years, it grows to approximately $173,000. Renting also gives you something buying can't: flexibility, early career, changing cities, changing jobs, changing life situations. Renting lets you move in 30 days. A house locks you in. And if you sell within 2 to 3 years, the closing costs and transaction fees alone, typically 8% to 10% of the sale price, wipe out any gains you made. Renting is not throwing money away. It's paying for housing, flexibility, and optionality. That has real value. But here's the number that changes everything. The average homeowner in America has a net worth of $430,000. The average renter, $10,000. That is a 43 times gap. And it's not because homeowners earn more. It's because of one thing: forced savings through equity. Every mortgage payment you make builds ownership. Slowly at first, then faster. And home prices historically appreciate around 3% to 4% per year. On a $400,000 home, that's $12,000 to $16,000 in equity growth in year 1 alone, before you've paid down a single dollar of principal. Renters get none of that. There's also a protection that buyers have that almost nobody talks about. Your mortgage payment is fixed. At $2,100 a month today, it stays $2,100 in year 5, year 10, year 20. Your landlord is not bound by that same rule. Rents go up. They have gone up every single year. On average, the renter paying $2,000 today is paying $2,600 in 5 years. If that trend continues, the homeowner is still at $2,100. And here's the final piece. American homeowners collectively hold over $34 trillion in home equity as of 2026. That is generational wealth that renting, no matter how disciplined you are, simply does not create on its own. So who actually wins? Neither, unless you know your break-even number. The break-even point is the number of years you need to stay in a home for buying to outperform renting when you account for everything: the down payment, closing costs, maintenance, taxes, and the opportunity cost of the cash you tied up. Right now in 2026, in the average US market, that break-even point is approximately 5 to 7 years, meaning if you buy and stay for 5 or more years, buying almost always wins. If you're moving in less than 3 years, renting almost always wins. Here's the simple rule. If you cannot commit to staying somewhere for at least 5 years, do not buy right now. Rent, invest the difference, and wait. But if you're planting roots, If you have stability in your job, your city, your life, the math over a decade strongly favors owning. Renting isn't losing. Buying isn't always winning. If this broke it down in a way that actually made sense, hit subscribe. I do the real math on money decisions like this every single week, and drop a comment. Are you currently renting or buying, and are you happy with that call?